So Uber stock just went public here today, and I'm getting tons of questions asking whether I think it's a good investment, whether I'm going to be investing in it, and really if Uber stock is a buy at these prices. Well, I've been an Uber consumer for a while now, and although I love the service and I use it quite often, it does not necessarily make it the best investment for me. So in today's video, I want to address this, and I want to go over exactly why I'm not interested in buying Uber stock, and I'm going to give you 3 reasons why that is. Alright, getting right into it, guys. First reason is monthly trips per customer, or MPAC, is stagnating. So Uber and Lyft both have a very similar model. They both rely on their riders to use the app as often as possible, because the more they use the app, the more revenue and earnings Uber will earn. So naturally, this is a big metric to look at when considering an investment in Uber or in Lyft. So what I did was I actually pulled up their filing, which has tons of information, pages and pages of information, went through some of it, and here's something that actually stood out to me, which raised a red flag. So this graph here you see on your screen now shows how many trips the average customer takes per quarter. So for the last year or so, this figure has essentially been flat year over year, implying that customers still use Uber, but their usage doesn't change month over month. And really, at the end of the day, this means that the number of trips per user on the platform are not growing quarter over quarter as fast as I want, because existing customers are not using the app more and more as months and years go on. This is a concerning factor to me for a growth stock. For Uber, considering they're still expanding to markets around the world, I would want to see customers using the app more and more. Even if it is a modest increase quarter over quarter, month over month, I would still like to see an increase in the number of trips each customer uses Uber for. And honestly, this is not a good thing for Uber or an Uber investor, because as competition increases in the future with things like artificial intelligence taxis, these number of trips on the Uber platform is most likely going to decline. If companies like Waymo and Tesla actually introduce their robot taxis like they are planning to do in the next few years or so, then you can almost surely bet that these Uber trips of 5.5 average will most likely drop down closer to 1 or 2 per month, if any. And when we look at this graph here showing the ride-sharing trips, you can see this has been on a steady decline as well, pretty much quarter over quarter and year over year. This again raises a red flag, considering this figure should be increasing as more people adopt the app. Uber is able to offset this by using services like Uber Pool and such, so their dollars that they earn per trip is increasing. But like I said, eventually once competition arrives, this will also get hit. And then at that point, you're going to have declining revenue and declining trips, which is not a good recipe. And this brings me to my second point, which is that revenue growth is leveling off. Since growth companies are typically not profitable, it's pretty much understood that if you're investing in a growth company, you're not expecting to see profits right away. Investors typically look at other metrics of the company to value it. Revenue is one of these metrics that investors look at, and they want to see a very healthy growth quarter over quarter, year over year in companies that are supposedly growth companies. That is because they do see that over the long period, that if these revenues just keep increasing exponentially, that economies of scale will kick in and you'll see profits increasing as well. And eventually you'll get something like an Amazon, which is just a pure profit machine. And there's many companies out there that show this path really. You can see companies like Square, Shopify, Tesla, the list goes on and on. They're increasing their revenue substantially, and investors do see a path for these companies to become profitable in the future. Now looking at Uber's revenue growth here, you can see that it's more or less stagnating here and leveling off, implying that we may have already reached a peak potentially in this app. Year over year increased from 2.4 billion to 2.9 billion, which is about a 20% increase, so it's pretty substantial there. But when you look at quarter over quarter, it increased by 1% from quarter 3 to quarter 4 2018. But the same period last year increased by around 13.5%, so growth has pretty much been halted here when we look at these stats. And what's interesting is that quarter 4 is typically colder for many markets that Uber operates in, like in Canada, even parts of the United States. So you would expect that more people would be using the Uber service more because they choose to use that instead of driving or walking around, and thus you would expect more revenue. But that doesn't seem to be the case here. Growth is stagnating and is concerning here for an investor or a potential investor. Which is why, although I don't think Uber has peaked as a service, I think growth from here on out for Uber will be pretty much modest at best. But therein kind of lies the problem, because the company, the IPO, is commanding a premium price, not a modest price for this company. And that's another reason why I don't feel comfortable or interested in investing in Uber at this point. And of course, the third point, which is also my biggest point, which is really anyone's biggest point if you're making an investment, is that this company is of course not profitable right now. They don't have a path to profitability, and they also don't own any cars, which makes you wonder how they're losing so much money. It's actually pretty ironic if you think about it. You have a company that owns 0 cars. They just pay a driver to drive a customer around. They get that money from a customer. They keep a chunk of that transaction. So you would think that'd be a pretty profitable model. But clearly from their balance sheet, this is not the case. And what's even more concerning here is that Uber actually stated that they may never become profitable. Here you can see that they say in certain markets they are having some difficulty. They are having a lot of competition, or it's just very difficult to acquire customers there. And as such, they may not be able to achieve or maintain profitability in the near term or at all. And as an investor, what's your goal when you put your money in? Of course, it is to have a return on your investment and make profit from that investment. You're not donating your money here to a company like Uber and saying, oh, here, use my money. You know, if you burn that money, that's okay. That's not called an investment, that's called a charity. So when you're investing in a company like Uber, you do expect to get some money back on your principal as well. So you gotta use that logic here. If a company's telling you straight out that they are gonna have a hard time becoming profitable, is that something you want to really put your hard-earned money into? A lot of people out there unfortunately fall into the trap where they say, oh, Uber, yeah, I use that service as a customer. I love their service, so I'm going to invest in this company. And this kind of mentality can lead to huge losses over time. And you got to understand, just because a company is a good service, it does not mean it's a good investment. For example, I'm a Spotify customer, and I use the service pretty much every single day because I absolutely love it. But as a business, their financials are not something that I like, and thus I won't be investing in Spotify, at least not right now. And this could be said for many, many great companies like Netflix, Yelp, Groupon. These are all services that I use. These are all services that I think are great for consumers, but their business models aren't really showing me that it's a worthy investment for my hard-earned money. And what's more concerning here for Netflix is that if you break down the quarter-over-quarter performance for gross profit and operating income, profits have clearly hit a plateau here, and Uber will need something very innovative to push it higher and start growing again because it's now on a decline. And operating income is showing no signs of slowing down and decreasing either. So this is a very bad combination if you want to see profits from a company, and really I just can't get behind numbers like this for an investment. Their expenses also keep growing, and although it's slightly down year over year, it's not enough to help drive them closer to profitability, at least for the foreseeable future. And a lot of you may be saying, oh, I might be missing out on an investment here which could double or triple my money in a few years. And that may be true. I can't predict the future. My crystal ball is somewhere around here. I haven't checked it recently. But my response to that is that there's a lot of better companies out there, in my opinion, that offer a much better risk to reward ratio, and that is where I personally plan to put my money into. I typically don't like investing in companies that are not profitable, but as you guys know, I own Tesla, so that's a pure example of where I see potential over the long term for massive profits, so I will put my money in there. And there's another company that I'm also considering making a long-term investment as well. If you're interested, I will be covering that in my stock market membership group, link in the description down below. But really at the end of the day, in my personal opinion here, I think that this IPO is just a way for those early investors in Uber, the ones who put in millions of dollars, hundreds of millions, even billions of dollars into the company way back when it just started. It is an opportunity for them to get out of this investment. The company's crazy growth days may be behind it. That doesn't mean that the company is not going to keep growing. I think that it will keep growing, but at a much slower rate here. But nonetheless, those investors that got in very early in the company are definitely going to be doubling or tripling their money here with this IPO. And the sad part is a lot of retail investors that love the service are going to be buying into this company, which I don't believe will yield proper results over the long term. I would love to be proven wrong here because I know a lot of new investors are interested in the Uber IPO. A lot of them got into the Lyft IPO, so hopefully it works out for you guys. But as the investment for me personally, I will not be touching Uber right now. I'd really love to hear if any of you are interested in buying Uber, or you own Uber, maybe you own Lyft. Let me know in the comment section down below so we can have a great discussion down there. Thank you so much for watching, guys. Don't forget to invest positively. I'll see you in the next one.